Where there's money, there are scammers. Where there's crypto, there are crypto scams. As the world becomes increasingly digital and our financial system more globalized, the landscape of investment fraud will change. Crypto scams are still on the rise, as they always will be. With ICO and other crypto projects booming right now, it is important to remember that scammers won't stop at any cost to get that extra bit of money. Scammers out there are looking for ways to steal your money. It's not hard to be swindled, but when you know what to watch out for, it's easy to avoid being scammed. But if you are not careful, scammers will take your money right in front of your eyes. And in the upcoming future, these scams are more likely to be more realistic. So how can you save yourself from getting mugged? Worry not, I have got you covered. Watch the video till the end, as a popular saying goes, knowledge is power. Hello and welcome guys to our channel, the SOM TV, where we discuss all about crypto. Like and subscribe help us grow this channel. So these are the top 5 crypto scams to watch in 2022. 1. Pig butchering crypto scam. At least some of the top crypto scams out there have colorful names. For victims of this cruel scam, however, the results are very serious. This scam typically begins on online dating sites, where the scammer uses an attractive profile picture to lure in the pig, then proceeds to fatten up the proverbial swine over a period of time via online messaging, with the victim steadily growing closer to and more trusting of the perpetrator. The scammer eventually tells the victim about some huge gains they've made in cryptocurrency markets and gets their mark to follow along in some investments, which initially pay off handsomely on paper. Of course, the money is lost as soon as it's sent, with the scammer using phony sites to dupe their victim into sending greater and greater sums of money to this fake account. Withdrawals prove impossible, and the pig, now fattened up to the point of slaughter, is left in the wind. This type of scam is thought to have originated in China and is notable for its relatively long duration. 2. A pump and dump scam. Pump and dump scams aren't unique to cryptocurrency. But without the regulation enjoyed by stocks traded on major U.S. exchanges, for instance, the Wild West of finance suffers with a good degree of fraud, including the pump and dump scam. Such scams, which are also primed to occur in the stock market in penny stocks, are characterized by a small group of insiders who own a given asset. In this case, a digital currency. These thinly traded assets are then hyped up through publicity, whether it be through social media, word of mouth, or other forms of promotion. When the unknowing investing public rapidly buys up the cryptocurrency, which is often newly issued with little trading history, the insiders begin to sell or dump the shares at high prices, sparking a steep sell-off and profiting at the expense of the duped masses. 3. Rug pull scam. One particular scam to avoid is rug pulls. Rug pulls happen when a cryptocurrency's promoters pump their new coin to get prices up before disappearing with the funds. Investors are left with a valueless token. This especially happens with coins with zero fundamentals and no real future. One key difference between a pump and dump scam and a rug pull scam is that the latter often doesn't even allow the non-insider owners to sell, with the token coded in such a way as to allow only insiders to exit. There are several other ways insiders execute these scams, which are specific to cryptocurrency. The rug pull scam got a lot of attention in late 2021 when a newly debuted cryptocurrency known as Squid Game, named after the suddenly popular Netflix series about a game in which all contestants are killed except one, who emerges with riches, lived up to its name and disallowed selling. Squid, the ticker for the coin, began selling at 1 cent, then rocketed above $1.90 before immediately plunging back toward zero when the scammers rugged the masses. 4. Airdrop crypto scam. Another scam, prominent in the decentralized finance or DeFi field, is related to something in crypto called an airdrop. More recently popular, Nefarious actors have grabbed a hold of the popular trend of airdropping tokens, which is typically done to start and grow a grassroots community. An airdrop literally drops tokens in your digital wallet as a reward for taking certain actions with a given platform or software. The scam works like this. An entity will airdrop you a token that appears to have value, and when you go to exchange that airdrop for another more well-known token, you give a protocol more permissions than you realize. This allows the hacker to access all of the assets in your wallet. The simplest way to avoid this scam: never give an unknown user permission to your decentralized wallets without understanding the abilities you are granting this person. 5. Phishing scam. One of the most common scams in cryptocurrency is the phishing scam, which, like the classic pump and dump, is not specific to digital currency. Simply put, it means tricking the victims into revealing sensitive details like passwords, keys, etc. Keys refer to the private keys needed to open any secure crypto wallet. It's equivalent to your password and is the only thing that gives you exclusive access to your funds. These scams, which are also used in run-of-the-mill identity theft and various types of corporate fraud, often come via email, with scammers posing as some authority and asking for details. These schemes also proliferate on social media. Please do not click any random link that you see on Twitter. Often, attackers promise riches and yields in return for sensitive information. Double-check the Twitter handles or the Discord ID. Make sure that you are sourcing links from real and verified accounts. It takes a bit of time, but it is extremely worth it. End cryptocurrency crime soared 79% and hit an all-time high in 2021, with bad actors illicitly pilfering $14 billion in funds last year. Crypto scams easily accounted for the biggest chunk of that total, while stolen funds, mostly taken from cryptocurrency businesses, were the second leading cause of loss. So, guys, that's it for today. Comment down below what you think about this scams. Like and subscribe. The SOM TV signing out.